Hey, how's it going, ladies and gentlemen? Welcome back to another episode of the Good Doc Talk Stocks. Of course, I am your host, Good Doc, Dr. Mike TV. And before we get started, ladies and gentlemen, make sure you get the likes up, but also make sure you get your stocks up as well, because our wealth will not build itself. All right, ladies and gentlemen, I do not wish to mince words. I do not wish to take up too much of your time. I want to take you back to when my investment journey began, roughly about the March of 2020 year. Yeah, about March of 2020. Okay. So about this time, I was just getting into the stock market game, and I was like, yo, man, I need to get into stocks that give me dividends. That way I'm always getting paid every quarter. I'm always making me some money, even without, doing anything. So during this time, when I was looking for stocks, I was looking for stocks that paid dividends, period. Stocks that I like and stocks that paid dividends. All right. So the first three stocks, if you guys remember that video, it's earlier on in the catalog. This is season 2, so this would be part of season 1. But in the early part of that catalog, you'll notice, or I made a video about the 3 stocks that I bought. And those 3 first stocks that I ever bought: Microsoft, Coca-Cola, McDonald's. These were all products that I use. Microsoft, Windows and, whatever on my laptop. I used to drink Coke religiously. Till this day, I still do. And I like McDonald's, man. I used to go there a lot as a kid. That was a staple in my house. Happy Meals. As I got older, still eating the same shit, still go to McDonald's. So those were the 3 first stocks that I opted to choose. And luckily for me, all 3 of those stocks paid dividends. Okay. But towards the later part of the year, December of 2020, earlier part of this year, 2021, I was having conversations with my mentor, big love to my brother. You know who he is. And he started telling me that he was leaning more towards a growth portfolio. And I was like, but why, man? I said, dividends are consistent for the most part, in the companies that you invest in. As long as you're invested in a good company, likely the dividends will be consistent. They'll go up, every now and again, every year or so, but you're guaranteed that money as long as you're invested in good companies. For the most part, you can safely say that you're guaranteed that money. So why in the world would you go into a growth style portfolio wherein the only way that you're actually going to benefit from that money is if you opt to sell any of the stocks or shares that you have in that company? So I was just torn. I'm like, bro, we can hold these shares forever, and as long as we hold them, we're going to get paid. But why in the hell are you going to put your stuff into a growth stock wherein the only way you're going to get paid is if you sell? So he commences to telling me, and we commenced to having this dialogue about, right now, growth stocks are where they're at. Actually, to be honest with you, SPACs, special acquisitions, is where it's at. Looking for companies that are looking to link with certain businesses that are looking to go public. For those that don't know what SPACs are, special acquisitions are just like shell companies or blank check companies where companies looking to go public merge with these particular companies, and that's how they find their way to the market instead of going through the traditional initial public offering process. Okay, so your SPACs, we were like, yo, man, SPACs is where they're at. Look for companies that are looking to pair with good companies, and when they do merge, aka like your companies like Switchback Energy merging with ChargePoint, and things like that. He's like, the potential for your money to grow is exponential. You can get it at a good price, and as soon as the merger is official, depending on who they merge with, whenever they actually make it happen, you can expect those stocks to surge in the years to come. So he was like, man, you got to look at it from our perspective. We're still pretty young. We're still able to, take risk. And I was thinking, yeah, man, I'm thinking like an old man. No disrespect to all of my older investors out there, but I'm like, yo, man, I am thinking like an old man going for the safe route. I know my dividends are going to be there, And I never sold out of all of my dividend positions just to make sure, but I've downsized my dividend positions, opting more for a growth style portfolio. So, I'm thinking to myself, he's kind of right. We continue to flush money into our dividend portfolio. I mean, dividend stocks, the ones that we opt to keep. No more than a handful, at least maybe about 5 or so dividend stocks. We just, continue to feed those to make sure that whenever we do get paid, we get paid a little bit of money, but also make sure we keep our eyes on the up and coming, the new shit, because the new shit has potential to skyrocket. And he made one of the greatest points I've ever heard in my entire life. He's like, bro, how much money did you make in dividends last year? Now, again, I just started, all right? So I can honestly say that my dividends from the time that I started getting paid dividends, I think my first ever dividend payout was maybe about April or so. Because I just beat the deadline for getting into a company that paid out in April. He said, from the time you started earning dividends to the end of the year, and tell me how much money you made in dividends alone. And I looked at it, and I did. And he was like, all right, Doc, do me another solid. With the growth plays that you've chosen, how much money did you make in the growth plays that you chosen? In my growth portfolio, I can tell you right now, just off the top of my head, just to give you a little mental note of where my growth portfolio stands. We got our NEOs, we got our switchbacks, our EV plays, our electronic vehicle plays. We got our marijuana plays, of course, and we'll get into those those topics a little bit later on as the podcast develops. We got our tech plays and things like that. Those are mostly for the dividend, but we got our SPACs. He was like, look at how much money you made in those particular stocks, just from the growth alone, just on the points alone, just on the percentage alone. I more than doubled, tripled, damn near quadrupled the money that I made in those plays than just earning dividends alone. And that right there is what woke me the fuck up. Still pretty young, still got a lot to go for, still got a lot of time to make money. We are allowed, we never want to look at it as making mistakes, but we are at an age in our lives, at least for myself specifically, and my mentor as well. He's got about 2 years on me. We're at an age where we can afford to take risks. We're still working. Granted, we're not going to sit there and expect that everything we get into is going to fail. That's not why we get into them. We've done our research. We've looked at them. We've looked at our SPACs to see who's going to merge with who and how and what potential it could bring to the market. And it dawned on me that, yo, man, I've got to really look at these growth plays a lot more serious than I look at my dividend plays. Again, we are in dividend plays. I got my monthly REIT. I'm not going to tell you which one it is. If you guys don't know already, I've already explained it to a couple of people, but I got my monthly, and no, it's not O. It's not AG&C. It's none of them. It's another one. Probably one of the best ones in the market, but I ain't gonna tell y'all about that. We'll have a video about that later on too. I got my monthly, so I'm able to get a little chunk of change every month because I flush a lot of money into that one. I got my tech plays that that pay pennies, man. They don't pay a lot in dividends, but they still have potential for growth. And what I noticed is, out of all of the dividend plays that I have, there's still a couple that have room for growth. More specifically, Apple. Apple doesn't pay shit in dividends. But where they're priced at now, to where it could potentially be, the growth is exponential. You feel me? If we think about where Apple is right now, roughly about 130-ish, maybe 140-ish, as of the recording of this video, and where it could be in the next couple of years, they did their stock split, of course. And at the time before the stock split, they were up to $500 a share. I do see them going back to $500 a share. Tesla did a split and damn near jumped back up, $800. You know what I'm saying? So they jumped up $500 or so, give or take, on the share price. So you're looking at getting into growth plays, or if you're going to play the dividend plays, look at companies that have potential for growth. That's why when I talked about SPG and I bought low, and I'm thinking, yo, this thing could still skyrocket back to where it was, or it could still do better. That's the only reason I opted to keep it. If you haven't caught that episode of the Good Doc Talk Stocks, man, I will try to link that one at the end of this video or leave it in the description for you. Okay? But that's just my thoughts, ladies and gentlemen. I think that if you have it in you and you have the time, you have the effort, you're willing to take the risk, go for your growth stocks. Let your portfolio grow tenfold. And then once you're satisfied with the growth that you have, I mean, we should never be satisfied with a growing portfolio, but once you're satisfied with, a couple of things, or you feel like you could take a little bit off the top, then take whatever you want to off the top. You can either invest in a growth portfolio or feed your dividend portfolio. You understand? That's the beauty of it. You got to give your stocks a chance to grow. You got to give your shit a chance to grow. And I think that's where a lot of us fall short, because we want to trade and shit. These retail traders, man, damn. I ain't talking about squeezes and shit. You've heard a lot of people cover that, but these retail traders, basically, I'm getting in and making a person's annual salary in like a day or something like that. I think that's crazy awesome. But, that's just not how we play over here. All right, it's awesome to see people bucking the system. It's awesome to see people doing things like that, because hey, us youngins who are just getting in, it's time for us to win every now and again, and I like that. I like to see us winning, but I just don't trade like that, man. I don't trade. I invest. I don't trade. I invest. If I get into something, unless something changes or my mind changes, I'm in it for the long haul, ladies and gentlemen. When I get into it, I'm going to try to hold it down for as long as I possibly can. And I think you should have the same thought process as well. All right. This is just coming from a novice, man. This is just somebody who has a passion for investing, who's new at it. So I'm always coming at it with a fresh perspective. And I'm probably not telling you anything that you haven't heard before. I just think that it's worth noting, and I think it's worth saying again. Okay. Again, this has been a good Doc Talk Stocks. Don't only get the likes up, make sure you get your stocks up as well. Why? Because our wealth will not build itself. Y'all stay true. Y'all stay blessed. Doc is out.